Hey, everybody. So we're seeing now that interest rates are not going to be coming down. So what happened? What we do see happening is that we saw the inflation numbers are remaining high. The job market remains strong. So these are what is affecting the Fed to prevent them from lowering interest rates. So we're not going to really anticipate any interest rates in the near future, any interest rate reductions, I should say, in the near future. So what we will be seeing are some higher interest rates even now. So let's take a look at the interest rates even this morning. Let me get that up on screen for you. Let me share this. So you can see here from the numbers, we're seeing a 30-year fixed is at 7.44, and you've got a 15-year at 6.5, and the jump was at 7.6. So we're creeping towards an 8% on the there. Almost between 6.5 and 7. So VAs are about the same. But that gives you an idea of what's going on with interest rates here in the near term future. So what does that mean for a buyer? What are some options for a buyer? So obviously your payment may go up with 1 percentage point, could go up as much as $1,000 a month, 1,000 a month, or just 1 point. So what you could do as a buyer is begin to be prepared to look at your purchase price a little more seriously. And you might have to lower the expected purchase price that you had in mind. Now talk to your lender, of course. You may have to lower that purchase price target and or search in a different neighborhood or city altogether to still attain the payment you would like to have. So that's one thing you can do. A second thing a buyer can do is ask the seller for a credit. So you've probably heard this already from your lender, that you can ask for, some lenders will allow up to 6% credit from the seller. This is when the seller gives you money back so that you can use that towards your closing costs, which also could include buying down that interest rate. So if you had an interest rate of 7%, let's say, you could get that purchase down or buy down to maybe 6.5 or 6%, depending on how much of a credit the seller gives you from their proceeds. They'll reduce their take-home amount, their net take. They'll give you a little credit back to you as the buyer in order to assist you with closing your loan. So those are a couple things a buyer can do. So what if I'm a seller and I'm now worried that the market may slow down or that I'm not going to have as many buyers to choose from? So a seller can make themselves more attractive to a buyer by allowing said credit that we just discussed for the buyer. So a seller can say in their agent private remarks to the public, as agents are bringing them buyers, it can let an agent know, a buyer's agent know, that we will offer credit for closing costs. So if a seller is able to offer that credit for closing costs, that makes them more attractive to a buyer because it's already the seller raising their hand saying, hey, Mr. Buyer, if you make an offer on my house, I'm willing to give you up to X amount for a credit, a percentage of a credit. So typically we see about 3%. The loan maximums that I've seen are 6%, but the standard is about 3% that I've seen personally. So that's one thing a seller can do to make themselves more attractive in maybe a smaller buyer pool, or just to assist buyers in this challenging market where prices are higher and now interest rates will also be higher. So what's a second thing a seller can do? Another thing a seller can do is offer to carry some financing. Now, you don't have to finance the entire loan amount. Now, you could if you wanted, if you had enough equity and you didn't need to cash it all out. That's an option for a seller. But even just a small amount that a seller can offer as seller financing to a buyer could assist a buyer who is being pressed for just that little bit of extra from being able to qualify to purchase your home. So talk to your CPA about this, your certified public accountant and or your enrolled agent tax preparer regarding the pros and the cons of doing that. Some of the pros are obviously if you do an owner carryback, you could be earning 9-10% is some of the numbers I have seen currently on the market, that you could be earning that much by lending the borrower that money out of your proceeds in order to facilitate the sale of your home. So those are a couple things a buyer can do and a couple of things a seller can do in this market that is challenging as interest rates are rising. I hope that helped you. Take care.